Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:13 p.m. that is Central Time, and today is February 19th. Well, today we had the dollar, gold, silver, and oil all in positive territory, and the 10-year yield in the USA was also down a little. So generally, when a combination of those factors come together, it's usually because we're looking at a risk-off period. And I think the proximate reason for that is because of the speculation around the possibility that the USA is going to decapitate the leadership of Iran at some point over the next week. And then there is the speculation that it might happen in the next couple of days, considering that today is Thursday, and the president generally tends to have a proclivity to do things on the weekend so that he doesn't disturb the markets, then the betting odds are probably going to be pointing towards at some point this weekend or next weekend. Of course, the other way of thinking about that is that telling the enemy what your plans are isn't particularly intelligent, so it might happen at any point. Of course, we've had upward pressure on oil prices for a little while, and the dollar is oversold. Gold and silver continue to hold within their respective ranges. But then, of course, going out and looking at the wider world, we've had a very strong performance out of Asian financials. And I think that's particularly interesting. Then the leading performer of global stock markets today was South Korea. It was up, I think, 4%. And that's a significant extension of the uptrend. It would be very tempting to think that that's all about AI and infrastructure or memory chip demand and Samsung's very impressive advance, but it's also been driven by the financial sector. Then, of course, with geopolitical tensions rising, the defense sector is doing better. What we've also seen in here today is that Italy is increasingly moving towards abandoning its adherence to the EU regulations around carbon pricing and removing that additional charge for consumers on their bills, which I think is very good news for Italian consumers. But it's also helping to suggest that at least there is some discussion about the wisdom of these kinds of taxes on the or within the EU and just how damaging it is